time for silver to reach its true potential. And what I'm seeing is, and you asked me before the show, what am I seeing with Silver Squeeze 2.0? And this is something I predicted after the first one happened. I went on Chris's channel, Arcadia Economics, talked with Andy at Miles Franklin about this, several shows. I think we were going to have a wave two. And as to when that occurred, it was going to take a little bit of time to build up. And the sentiment that we have had for silver has just been immense the past couple of months. It is blown up. It is so much bigger than what it was. And what I'm seeing in emails is people are emailing me saying, I'm buying my 100 ounces. I'm buying my 10 ounces. That's all I can afford. I'm buying my 1,000 ounce bar. They're buying what they can and realizing that they want to exchange their fiat dollars for something of longer term value. And so I think it's a pressure cooker. I think there's a lot of interest in a grassroots campaign for people who want to store their money in something valuable. And we're starting to see this just massive demand for silver buildup that I think is so much bigger than what we saw at the end of January and early February in the original version of Silver Squeeze. And again, I'll say this is the second wave. I'll go out on a limb and say, I think we're going to have third and fourth waves. I think this is going to continue as it expands into public consciousness. I'm seeing more mainstream people interested in silver for the very first time at a level I've never seen. And going back real quick to 2011, I was working as an auditor at a mortgage servicing company back in 2011, the largest subprime mortgage servicer in the US. It was American Home Mortgage Servicing. When silver got close to $50, people around me, because I'd written the book Drop Shadow, The Truth About the Economy, and talked about our economic issues that we had in 2008 and 2009. So people had read that book, they were aware of the precious metals, they got really excited when silver got to $50. But then when silver fell off, interest just died. I mean, and it died in a matter of a couple of days, and people just kind of went about their normal business. The difference now, 10 years later, Elijah, that we saw in February and that we're seeing even bigger now, is that silver had only gotten up to $29 in 2020. And it was trading, I don't know what it was, 24, 25, 26 when the silver squeeze movement began. It wasn't touching its all-time high, but you saw this grassroots movement without that price having gone to that range, unlike 2011. So we had the silver squeeze movement, 110 million ounces pulled off of the London OTC market, put into SLV, and then it just kept building. And so we're not hitting all-time highs, but the amount of interest in people who have never thought about the precious metals is so much bigger than what we saw in 2011. And that tells me it's a genuine movement and a genuine market. So I think what happened back in January, February timeframe is you had people buying silver. They were going into like the SLV, for example. The SLV traditionally, as sort of a paper proxy of silver price, really affects the movement of the silver price. However, it's not going into SLV now. It's going into retail buying. So people are buying coins and bars, and that's what's driven up the premiums. And on Buffalo Bison's website, they're a retailer. They're actually selling chopped up COMEX bars. So they'll chop up a 1,000-ounce bar from COMEX, and it's how many ever ounces it is, and they're selling it at the silver price at a reduced premium because people can't get the retail. But because it's not gone into SLV, it's actually gone more into PSLV, you're not getting that pricing signal. In addition, on the COMEX, we're seeing a lot of shorting in COMEX in terms of the overall short open interest. And I can show charts on that if you like, that the overall short open interest is highest in the two precious metal, gold and silver, when we look at terms of days of production. In other words, how long it takes us to replace that actual physical commodity. These two metals have the highest shorts on the COMEX of any of the commodities, more than sugar or wheat or platinum or palladium or anything that you can trade. It is the precious metal. So there's more short pressure now on those markets than we had the first time. But even though that's occurred, I don't think long-term that's going to stop the price. I think what's going to happen is that price is going to run, but I think what's going to happen is we're going to have this physical shortage, and it's not just going to be the retail market. We've seen that start to hit the COMEX, and so the pressure is building. And if you don't mind, if I can share screen, I wanted to show something printed from the LBMA that you and I talked about last time. I was on the Miles Franklin channel talking about their admission that they essentially had almost run out of silver during the silver squeeze. And basically it came out in a silver 2021 spring report that they had 360 million ounces left. There were 110 million ounces of interest that people had bought through the SLV. It had got pulled off of the London OTC exchange, because the ETFs are mostly, they store in London. So 110 million came off. The LBMA came out and admitted in a paper, I think it was sometime in March, if I'm correct, that they were like 2 weeks away from not having any silver whatsoever on the London OTC market. So they were just a couple of weeks away. And now we're seeing on COMEX that silver come off. We've had 40 million ounces of silver come off since late February in the COMEX. So it's not just the retail buying, it's in the big bars. It's being pulled off of actually physically off of the exchanges. So we're seeing the silver come out of the depositories, the big silver, the 1,000-ounce bars. We saw in February where London almost ran out. It's a derivative market. There's a lot of paper sitting on that. But when people were buying SLV, it was coming out. And another trend that I'm seeing is in the last 4 weeks, if you look at Gold Charts RS on Nick Laird's site, in the last 4 weeks, 7 million ounces have come out of SLV, and 5.7 million of those ounces have gone into PSLV. So people have changed their patterns, or getting smarter about how they actually get to real physical, because in the SLV, you can't get the physical unless you own 50,000 shares or you're an authorized participant. So people are shifting from these derivative products to the retail products. Now, it's going to take a little while for that to catch up with the market price, because the market price is determined by derivatives. It's determined on the COMEX by the futures trading in London. It's determined by that spot price and the 2 AM and PM fixes. And the SLV was that signal for the retail market, when that buying came into SLV, that price should rise. So the traders have shifted to the real physical amounts, which is not going to be reflected in those derivative prices. So the price rise will come. It's just going to take a little while, and it's going to be that physical pressure on those big markets that's going to occur. So the second wave will be different from the first wave, but it'll be bigger. It takes a little bit longer to build up that momentum in the second wave, but when it builds, it's going to be bigger. So give it a little bit of time, we'll see that price rise. Yeah, so essentially, if we look at the March data, I'm looking at the CME month-to-date delivery notices for March, and the total delivery of COMEX 5,000 silver futures contracts was 2,987 for the entire month, 2,987. Closed and managed and have direct exposure to the metal. You can claim the metal. And so we're seeing that shift, and that's really wave 2. Wave 1 was trying to address buying silver through these common market derivatives. Wave 2 is saying, no, we want the physical. I'm taking delivery of the physical.